Today we're going to show you some of our bespoke indicators. Now I have an indicator that actually is based on Bill Williams' indicator of a 5-candle setup, but this is not a 5-candle setup. This is a 3-candle setup using Heikin Ashi candles, and this indicator identifies all the fractal breakouts, long and short, and it actually draws a line to tell you where to get in, where to get out, also where to put your stop. And very, very powerful indicator. We use it in our live trading every day. Come on,
right, okay. So, normal traders I observe outside of my room usually use 1 hour candles, 4 hour candles daily, support resistance, and can be very long-winded trading. In our trading room, we often do 2, 3, 4, half a dozen trades a day, and we often make upwards of 2% a day every single day using the strategies. So one of them is fractal tools. So rather than being into a trade, putting in for an hour and sit there and wait all week for your 1% or your 2% or even your 3%, we'll just run this down into, let's say, 5 minutes. And Fractals breaks the market up. As you can see, I've got a bit of confluence there. Just take that out of the way. And let's just zoom in to fractal tools. So you can see here, this is the top of a fractal, and this is the bottom of a fractal. The algo automatically draws in a green line for long, like a green candle, and a red line for going short. So if you are going long, and you're breaking out to the top of a green fractal, your stop goes under the bottom of the red fractal, and vice versa. If we break out of the market coming down, then that's what we do. I've illustrated this particular part here just to prove to you fractals do not work all the time, just 80–85% of the time. Very, very good. So here's a fractals. And what we're looking for at the base level, without using any other overlay, and I don't recommend not using any other overlay, but just using the raw fractal itself. So we come and have a look at the markets moving up, and then we look at a opportunity to go short, and our short position will be a direct break of that fractal. I'll just put this little tool in that we've got, and that can measure exactly where the stop should be. So there's a stop. We always use in fractals, we use the spread of the market +1 to make sure we don't get a double tap and get knocked out of the market. So we have our little stop up here. The fractal, we put our entry in here, our stop up here, our take profit here. And then as the market moves across, these are in 5-minute intervals, 5, 10, 15, 20, boom, the market goes in and you take a trade. Likewise on here, this is another trade, there's another trade there, there's another trade there, there's another trade there, there's another trade there, and another trade here, for instance. So you can see we took 1, 2, 3, 4, 5, 6 fractals, and every single fractal one going short today. So taking these fractals short, again up here, short, 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 market broke here, short. Nice to see one that actually doesn't win. So that was 8, 9, 10, 11, 12 trades, 12%, and we lost one. So that's just one. And then we won another one, and then we won another one, and then we won another one, and then we won another one. Just an example. This is what we do every single day. And fractals, really, really powerful. How do we know which direction to go? Like I mentioned before, you don't just take fractals ad hoc. You take them using some other things that we use. Fractals on their own can be very powerful in any direction, regardless of the trend. So, just as an example, if we got stopped out in here, then we just decide to go back with the with a reversal trend here, and we just keep trading until we get stopped out again, and then reverse and go back down. They always win more than they lose, and by a big margin. But to give us an extra edge, almost 12 trades, 11 on the bounce that we won, we do an overlay. And because we trade in a small amount of time, simple moving average is no use to anyone if you want to make some real money in the market. You need to use exponential moving averages. We put exponential moving average on, and what we do on the day, we use a 4-hour 200 AMA exponential, and what we do is we trade the market short using fractals when we're under the 200 EMA, and we trade the fractals long while we are above 200 EMA. There's another EMA that we use to make it really powerful. I'm not saying it's 100%. It's very, very good though. But hopefully that was a quick insight into some of the many things that we trade live every single day. And we trade that.